Hi friends, in this video I will present to you 3 stocks that are on my watch list for short-term investing. Short-term investing I mean up to 12 months of duration. Throughout this video I will present to you critical information about these 3 stocks, so a humble request for you to not skip the video, otherwise you are going to miss quite a few important points. With that, let me start with the first stock. The first stock is Electrosteel Castings Limited. What you see on my screen is the 5 years chart history of this stock, and you will notice the stock used to trade at around 30 rupees, 35, 36 rupees up until January 2023, and all of a sudden from January 2023 the stock has given a massive bull run and is right now trading at around 164 rupees level. This is primarily because this stock's business is enjoying very good tailwinds. Now you will immediately say that Rahul, you YouTuber, come up with these heavy jargons and words that tailwinds prove to us. Absolutely fine, you should challenge me on everything that I speak on this channel. So let me prove that why this stock is enjoying, or the business that this stock is in, why is it enjoying the tailwinds. So if you see my screen, Jai Balaji Industries Limited, very similar story here. The stock used to trade at around 52 rupees up until January, February 23. And from that point, the stock has gone up to close to 1200 rupees level. This Jai Balaji Industries have grown even faster than the Electrosteel. Another example that I want you to look at is Jindal SAW Limited. Again, the similar story here. Up until January 23, the stock was at around 100 rupees level. It has now gone to 500 rupees level, right? So what is common in these 3 stocks that I've just shared? If you look at my screen, you will see that all these 3 companies are manufacturing ductile iron pipe. And the demand for ductile iron pipe in the last 1 year has gone crazy, and that is why these stocks are buzzing. Since these 3 stocks produce ductile iron pipe in a good quantity, I have picked up these examples, and I hope my point is very clear to you that this business is right now enjoying tailwinds. And when you're investing for short-term stocks, what you're looking for is a momentum, right? And if you like this point of view, request you to hit the like button on this video and let me know in the comments a simple thank you. Let me now present to you more details about this stock. First natural question about Electrosteel stock might be that Rahul, the price is already 5 times, 6 times within 1 year. Who will invest in this company? For that, what I want to do is have a look at the shareholding pattern of this company, and you will see that in the last quarter, promoters have bought 2% stake into the company. So it means promoters of this company are buying the stocks from the market, right? That is a very healthy sign that even promoters are ready to buy the stock at this very high price. Also, if I show you very similar pattern with Jai Balaji Industries Limited that I talked about earlier, you see the promoters investing pattern here. In the last 2 to 3 quarters, they have been consistently buying this stock. You see, it has gone from 53% to 55 to 58%, 60%. So it means Jai Balaji Industries stocks have been bought by their promoters in the last 3 to 4 quarters, as we have seen the data. The same is the pattern with Electrosteel as well, where the investors have bought the stocks from the market in the last couple of quarters, right? The second natural question is then, why are we not considering Jai Balaji Industries? Simply because of the valuation. If I show you the PE comparison of Jai Balaji and Electrosteel, you will see that Jai Balaji's PE is at around 33, while the industry is at 21. So in my opinion, this has a higher risk of correcting versus Electrosteel, which is at PE of 16 versus industry PE of 29. So as I always say, there is a lot of juice left in Electrosteel versus Jai Balaji, even if you look at the PE. That is the reason I am not considering Jai Balaji right now in the short term. Electrosteel looks better from a valuation perspective, although both stocks have given very good rally in the last 1 year. Hope these 2 points are very clear to you. Please go to screener, have a look at the investor pattern in these 2 stocks, and you're going to see that picture yourself. Let me now quickly share 3 to 4 critical points about Electrosteel stocks so that we can understand what is the future prospect of this stock in the next 12 months time. First point, page number 3, their management is saying that they're sitting at highest ever quarterly EBITDA and PAT profits. And the reason is because of domestic market demand, and they are mainly coming from government because of Jal Jeevan Mission, Amrut 2.0 and irrigation schemes. These 3 schemes of government is trying to get water to millions of people in India, and that needs ductile iron pipes to carry the water. I would highly recommend you to go and read about these missions as well. For example, Jal Jeevan Mission, The attempt here is to supply tap water in households in India. And what you can see here that from 2019 to 2024, how the water supplies within the India has grown. And that is why there is a good demand from this sector. I would highly recommend you to read about this project as well so that you can understand more about the demand coming from this sector. Second tailwind is demand from Eastern European countries, including France and Italy as well. As you read this management commentary, page number 6, you will clearly see that management is saying that there is a lot of demand coming from European countries, and that is why they are also going gaga about the export potentials from this stock. Third demand driver that is coming is from Middle East, especially Saudi Arabia, Kuwait, Oman, UAE and Qatar. There is a lot of demand coming from these countries as well because there is a lot of infrastructure work going on in the Middle East right now, and therefore in the next few quarters the demand is likely to be very high for ductile iron pipes. Another important that we need to note here, page number 3 of their latest investor presentation, what their management is saying is that they are right now sitting at an order book of 6 lakh tons, and that is sufficient for the next 9 months to 10 months of orders. Again, this is a very, very healthy order book, and that is why I have included this stock in my watch list for the short-term duration. Another critical point about this stock is that the company is expanding and they are putting 650 crore rupees of capex because they want to enhance their capacity from 6 lakh tons to 9 lakh tons, and they are going to achieve it by September, October FY 2025. That is going to give more boost to their revenues and profitability. If you look at the debt of the company has been able to reduce debt, and you can clearly see these numbers on my screen that in the last couple of quarters the company has been able to reduce debt, of course because the company is making a lot of profits. Last point I want to make about this company is, if you notice this company's quarterly results, what you will notice is that the revenues are almost flat, right? But if you see operating profit, that has gone from 160 crores to 300 crores and 406 crores. Also, if you see the interest here, the interest that the company pays on the borrowings has come down as they have reduced their debt, because of which what has happened is that their profits, although the revenues are flat, but their profits have almost gone 4 times, 75 crores to 263 crores, give and take 4 times. And the key reason that the management is giving because of the higher EBITDA margin is the operational efficiencies here and the economies of scale, which is excellent for any business, because even if the revenues do not grow, what the company is doing is company is able to save money through their operations, and therefore they are able to generate better margins. Having said that, there is one very, very big risk with this company right now. And the risk that I see is profit booking, because the company has given massive return in the last 1 year. Even if very simple mistake the company makes, or even if there is a bad news, it might be a sectoral bad news, it might be a bad news from Indian government's perspective, it might be a bad news from exports perspective, the stock is going to tumble because the stock has already gone very high in the last 1 year. And we can see that profit booking in the last few days here. The stock was running at 197 rupees and it has come down to, let's say, 158 rupees, found the support at 158 rupees, again back up to 182, and then again came down, found again support at 159 rupees, and now it is trading at around 160 rupees at the time of shooting this video. And if you like this sort of analysis, you can consider subscribing to my YouTube member community, because I post unbiased analysis of stocks, mutual funds and various other assets, and you're going to learn a lot about investing. Before I move to stock number 2, a big disclaimer: please do not take any of these stocks as recommendations, because I am highlighting you risks, I am giving you analysis, and it is up to you to make the decision. It is your money, your decision. With that, let me move to stock number 2. The stock number 2 is Narayan Hrudayalaya, one of the very good hospitals right now that is trending. In the last 5 years, I can safely say that the stock has been an evergreen stock, because if you see, very, very beautiful line of a growth stock that you can see here, not a very big volatility or cyclicity that we see in many other stocks, right? So from that perspective, this is looking really good. If you look at the last 1 year, the stock has moved by 65%. Why? I will speak about it in terms of what are the critical points we need to understand. But if I just take you, why I am picking up this stock in my shortlist is because of its valuation again. Narayan Hrudayalaya, how does it stack among all other hospitals? If you look at the PE ratio of the stock, 34, while the industry is at 41. And if you look at all other hospital stocks, the PE is gone crazy right now. Many hospital stocks in the last few quarters have been rallying like anything because of some good reasons. But this stock right now is at lower PE than industry PE. That is why this stock got my attention, right? If I now talk about the PE of this stock in the last few years perspective, it is trading at lower than its own median PE. You can see the graph here, it has come down to roughly 36 levels, which is really great from a valuation perspective. Now, any hospital stocks that you consider, please also look at the balance sheet and the debt, because these are capital intensive stocks. If you look at the balance sheet of Narayan Rudale, you will notice that the debt has gone up in the last few quarters. It is now 1000 crores, right? But if you look at the reserves also, it is all-time high, 2200 crore rupees. And if I read the commentary, the management is also saying exactly the same thing, that they are having debt, but they also have liquid investments as well as cash position. That means that they are net debt-free company right now, or they have a very minor debt right now. So from that perspective, it looks good. If you look at the P&L account of this company, you will see in the last few years, the company has been growing at a very good rate in terms of revenues, all-time high, profits, all-time high as well. Last trailing 12 months, compounded profit growth is 54%. And if we were to just compare and contrast it with another hospital, Apollo Hospital, you will see here Apollo Hospital's last 12 months compounded profit growth is slower than Narayan Rudale. It is standing at 3%. In fact, March 2023, their profits came down slightly. Maybe they had an exceptional profit year in 2022. Again, I'm not saying Apollo is a bad hospital stock. Please do not take it that way. But we're trying to contrast and compare here just so that we can understand where this stock is going to move and what is happening in the last couple of quarters. If I present to you shareholding pattern here, promoters, FIIs, DIIs holding good stakes, there is not major movement. From a public perspective, Kiran Majumdar Shaw holds 2.30% stake in the company. If I continue to talk about what are the triggers or tailwinds of this stock, why am I considering this stock in my watch list for the next 12 months? Mainly because of few reasons. Number one is the capex strategy. The company is putting a lot of money in their capex or expansion. You can read the numbers. These are all million rupees numbers, right? There is a lot of money that the company has already put in 2023, and by 2024 year to date, also sufficient money has gone into the capex. What are they actually doing? They are coming up with a hospital in Cayman Island. Cayman Island, they already have a hospital. They are opening a new hospital there. It is a British island, right? Go and Google it. You will like it. Also, they are coming up with a new hospital in Bangalore and Kolkata. So they have already got the land in Bangalore. In Kolkata, they are yet to acquire the land. So it's going to take some time for them to build these hospitals, but they're already putting this money. That tells me that in the next 2 to 3 years, the revenues are continue to grow. Again, I'll speak about the risk as well in a minute. The second tailwind is that this company is also entering into insurance business. In fact, in January this year, they have got the license from IDAI, which is a great news because I think they have been waiting for this for last 5 years. So this business is going to get started, I think next year is what their management is saying. Next year they will make this live, and this is going to be a slow start of their business because they're only going to start this business in Karnataka, not a pan-India sort of a start. Third point about this company is that the company started its own IT subsidiary called Medha AI PVT Limited. And what this company has done from an IT perspective is that it has developed a lot of apps that the company is using. As a result of these apps, what is happening? For example, I was reading their management commentary, and what their management is saying is that this app here, AADI, has saved 2,500 surgeon hours. So operationally, they are getting better. They are getting efficient using this digital IT infrastructure that they're developing in-house. Also, you will read in the commentary here that they have done 90 plus robotic procedures, 60 plus robotic ortho procedures. I think these are all very good future looking technology improvements and enhancement the company is doing, hospital is doing, which is really great science. Is there any risk with this stock? Actually, there is one big risk with all the hospital stocks right now. Let me quickly share with you. What you will see here is that Supreme Court is asking center to decide the rates for the medical treatment. Why? Because NGO, Veteran Forums for Transparency in Public Life, very recently has filed a public interest litigation to Supreme Court saying that as per the Clinical Establishment Rules 2012, what the hospitals need to do is they have to standardize the rates of their treatment. For example, a cataract operation in a government hospital cost you 10,000 rupees. But if you go to a private hospital, it might cost you anywhere between 25,000 rupees to 1,50,000 rupees, right? So this petition is all about asking Supreme Court to enforce these rules to have a standard rates that they need to publish. And if this happens, then what is likely to happen is that companies' revenues are going to fall because they have to follow standard rates. They can't really charge anything. Now, whether this is likely to get implemented or not, I can't really say anything about it. All I know is that there are stakes in these hospitals by big politicians. Again, I'm not going to name anybody here, but in my view, it is going to be a tough contest. But yes, if these rules get implemented, the stock prices are going to fall. Not just this hospital, all other hospitals. So I really want you to understand this risk. I'm presenting you unbiased analysis here, giving you risks, giving you fundamentals. It is up to you to make decisions. And also please know that no stock comes without any risks. Investing in stocks carries a lot of risk. Some risks we are able to see upfront. Some risks we can't even see them. There are hidden risks, right? So with that, I hope you are enjoying this video so far. Hit the like button. Let me know in the comments a simple thank you. Let me now move to stock number 3. Third stock is Hero MotoCorp Limited, a stock from auto sector. If you look at the stock last 5 years, the stock has given only 65% returns. And if I show you the last 6 months, the stock has gone up by 56%, as you can see on my screen. Meaning that out of 65% returns in the last 5 years, the stock managed to give 56% returns in the last 6 months only. So the stock is trying to gain its lost glory is what I say. Why? I will explain to you in a very simple term. If you look at first the peer comparison in terms of the valuation, the stock PE is at around 24, while the industry PE is at 45. So there is still a lot of juice left in this stock in my view, right? If I now talk about the sales figures of this company, you will notice that last trailing 12 months, the sales growth has been 10%, but the profit growth has been 43%, right? This is a very good growth rate that we are seeing in the profit in the last 12 months, right? Also, if you see March 2018, their profits were all-time high at that time, 3,700 crores of profit. Slowly, the profits started to decline. As you can clearly see in this chart here, came down to 2,800 crores in March 2023. But last trailing 12 month, it has gone back to 3,600 crores. So it is going back to 2018 levels. And in my view, it is going to break all the records of the previous highest ever quarterly or yearly profits that the company used to make, right? And in fact, if you look at the quarterly results, you will see the last 3 quarters has been very good profits. Their profits are now moving towards 1,000 crore plus quarters, right? Which is excellent news. Now, what is driving this company's growth? Number one point is the premiumization of the bike segment. So the company used to have only 4 models back in 2020. It has moved to 7 models in 2024. So they are launching a lot of premium bikes. For example, if I speak about Harley Davidson X440, you will notice that the volumes have doubled in just 1 quarter. From October to December, it has gone from 2,000 to 4,000 levels. More importantly, if you look at the order backlog of X440, it is sitting at 25,000, right? This is huge. They're trying to deliver these bikes, but they can only deliver up to 10,000 units per month, even if they implement phase 1 of their supply chain processes, right? So again, there is a lot of demand coming. They are not able to fulfill that demand. Point number 2, if you look at the Charisma, they're again another very good selling product. The bookings are 13,600. They've only delivered 1,500 plus, right? Again, there is a lot of demand coming from the premium sector. Also, if I continue to speak about their other business segment called parts, accessories and merchandise, they have been doing really well. They have got annualized revenue of 5,500 crores, which is very significant in the overall revenue mix. But more importantly, the company is now putting 600 crores behind this particular business because they want to make it to 10,000 crores plus business. Lot of investment happening because of this growth that the company is seeing here. Also, the company declared a good interim dividend, 100 rupees per share very recently. Also, they have launched Maverick 440. Let me show you that bike. This bike was launched in January 2024, if I'm not incorrect. It is a 440cc engine bike. And as I keep saying, Indian consumers' aspirations are growing. Their disposable income is growing. They're able to spend a lot of money into these type of bikes, and therefore the demand is looking very good for the next 12 months at least. You can pause the video if you want to read this commentary, but the overall message is very simple, that the sentiments or the demands that are going to come up in the next 12 months is looking very positive. Now let me know in the comments, out of these 3 stocks, which one do you think is going to be your pick? I would love to read your comments. Also, please do not take this as a stock recommendation because I can be 100% wrong and you can lose your money if you invest in any of these stocks on the basis of this video, because do your own research, because it is your money, it is your decision. With that, I'll see you in my next video. Until then, keep rocking.